everybody. This is Dan Sheridan. It's Friday, July 14th. It's about 12:14 Central Time, lunchtime. And we're going to do our Friday Dan's plan for next week. And so before we jump into that, as we look at the SPX right now, look, this week we were up about 100 points in the SPX. You can see, you see what I got here. Well, we were up 100 points in the SPX, and a lot of it was just because you had the impetus to do it, whatever that means. You had the CPI came out Wednesday, our PPI Thursday. So the CPI, as we said even last week, was probably the biggest news of this week and next week. So I think next week is going to be a pretty good week for range-bound trading. The week after might potentially be a little bit dicier just because you have, I think, the 25th and 26th, the Fed meeting, and then you have your Amazon and where are the ones here? Amazon will be earnings on the Apple's the 27th, which is a Thursday. Amazon's the 27th. Microsoft the 25th. The Fed meeting 25th and 26th. Next week you'll have a couple biggies on Wednesday after the close. I think July 19th, Netflix and Tesla. So I think next week will be pretty good. Right now we're very low, 13.5 VIX. The range for the last 5 to 6 weeks, that's what I kind of look at, is 13 to 16 basically. Pretty tight range. We're at the low end of the range. So I might want to be a little bit long Vegas. So here we go. Here's the 3 things. I'll try to be as specific as I can. So on Monday, right, we have an appointed time on the Monday. Now, barring we don't have, when I look to put this on at 10:30 in the morning Central on Monday or so, 11, SPX isn't up or down more than 1%. If it is, I might hold back, but this is what I'm planning on putting on. And again, I just set the size here to be around $1,000 to $1,600 on each trade, just to keep it uniform. Could that number be $500 each trade? Could it be $5,000 each trade? Or it doesn't matter. The point. So I'm looking at 3 trades. Monday would be a double calendar. Now, this is the exact expiration I would do it. The strikes might be a little bit different if SPX changes, but I'm going to show you how I do it. So I'm looking at Monday, I'd be buying July 24th, selling July 21. This would be a double calendar. Now, so Monday, I'd be looking at putting it about, let me see, if we changed in the SPX since I looked at this. So when you come in Monday morning, I would be looking to do this. So I'll give you my parameters wherever the price is. So let's say we're at 45.10, and that's where we're at right now. And SPX, I'd go up about, let me see where I have it right now, 45.10. I go up to 45.40. Just want to make it as balanced as possible. This would be your double calendar. And then I think that's pretty balanced to me. Let me just wait. I might do one last tweaker of 40, and there we go. All right, that's fine. So come in Monday morning, right? Today, if I buy July 24 and sell July 21 is going to be 7 days from expiration, right? But on Monday, when I come in about 10:30 in the morning, I buy July 24, I'm going to sell July 21. The July 21 will be 4 days from expiration. So it'll be a 4-day trade. I'm going up about 30 or 35 points, down about 30 or 35 points, and setting my calendars there. A bullish call calendar, bearish put calendar. And I want to be, when you're long positive Vega, I mean, you want volatility to go up, you always want to be a little bit long delta to help offset that. So that's trade number one. I'm setting a double calendar. It'd be somewhere near $500. So I'm doing 2 of them. I want to keep the trade around 1,000, 1,500. So you get an idea of what I'm doing here. This would be $1,000 trade. This is the current underlying here at 45.10. Right now is a Friday, July 14th at 12:20 Central. My upper strike is 45.40 on the bullish calendar. And my bearish strike would be 44.75. Say, Dan, what if the SPX is different than this on Monday morning? Well, I gave you instruction, right? Well, 35 or 40 up, 35 or 40 down. So we're positive theta traders. We're getting time decay in our favor, a little bit of long Vega. And that's the double calendar, 4-day trade, putting it on Monday, about $1,000, right? Next, Tuesday or Wednesday, whatever's better with your schedule. Here's a $1,600 butterfly. I would call this a broken wing or unbalanced butterfly. Here she is. So I'm getting, now, again, why am I putting these on different days? I like to diversify when I put trades on, so you get price risk. Diversify. If I put one trade on that benefits of volatility goes up, like a calendar or double calendar, and a trade that benefits of volatility goes down like a butterfly. Do I want to be a little bit net long Vega on my 3 trades? Yeah. Why? The VIX is at the low end of the range. What does that mean? The VIX range over the last 6 weeks is 13 to 16, plus this 13.48 is probably like the lowest range in 5 years. So you'd want to be a little bit net, banking on kind of reversion to the mean. I want to be a little bit long Vega as the volatility is low. So this is what I would call a broken wing or unbalanced butterfly. You can see I'm doing the OG4 expiration. The OG4 expiration today is 21 days out, but I'm not doing it 21 days out. I'm going to be doing this next Tuesday or Wednesday. So if I do it Tuesday, right? If I'm doing it Tuesday, it'd be a 17-day trade, right? But I'm giving you the expiration that I would do it on, August 4th. So August 4th on Tuesday would be a 17-day trade. This next trade, I'm going to do a calendar. If I put it on next Thursday, it'll be a 15-day trade. So this is the expiration I would do. So Tuesday, I'd put this butterfly on. My short strike is at 45.10. My in the money lower call is at 44.50, down 60 points. My upper strike out of the money call is 45.60. So this would be unbalanced or broken wing. What does that mean? The distance from my short strike to the upper long strike, which is out of the money, is 50. This one's out of the money. The one I'm selling is at the money, but I'm selling 2. I'm always selling the ones with more extrinsic value because they decay the most. And the in the money option, the 24.50. The distance from the in the money to the at the money is 60. So I would say in vernacular, I'm doing a 60-50. That means the bigger number is always the downside, 60 wide on the downside, so you're gonna have a little more risk, 50 wide on the upside. And people like these, all different configurations of these things, because, you know, I'm doing it unbalanced to get my position deltas near neutral and in positive theta. But one of the side effects of this is, okay, my downside risk is 1650, my upside risk is 645. So it's a much more palatable experience on the upside. So again, double calendar on Monday with the expiration July 24, 21. It's a 4-day trade. What are we doing on Tuesday? The butterfly. Broken wing or unbalanced to 60-50. What does that mean? 60 wide on the downside, 50 on the upside. That sucker costs about $1,600. Last but not least, something we've been doing for years in the community, the Thursday calendar, 15-day calendar. I'm doing it twice. It'd be about $1,000 trade, trying to keep the trades 1,000 to 1,500. I'm selling the AUG4. I'm going to do it on Thursday. So if I do it on Thursday, I'm going to do it 2 weeks from the next day, Friday, which would be August 4th. On Thursday of next week, 2 weeks from the next day, Friday, would be 15 days. So I'm selling AUG4, buying the AUG9, and I generally would do this at the money. We're at 45, almost 45.09. And this is a calendar, costs $5.20 or so. That's the debit, that's your risk. And again, positive theta. So we make money in the 10th. This is your expiration graph in 15-day, or today, August 4th, it's 21 days. But when you put it on next Thursday, I would put this on not today, to be 15 days. So when you combine them all, sometimes I like to take a peek. Again, the double calendar I'm putting on Monday, the butterfly Tuesday, the calendar Thursday. And sometimes I like to take a look at all of them together, and you can see now I've got, you know, $1,000 in the calendar, $1,600 in the butterfly, and on the double calendar, about $1,000. So this is about a $3,600 portfolio. Could you do it on $1,800? Yeah. Do you need a lot of money to do this? No. You learn the craft smaller. And so combine the positions. Here's my position deltas at this price right now. I'm bringing in positive time decay of about 180 bucks a day. And I'm a little bit long Vega, which I don't mind being with VIX at 13. Folks, have a great weekend. That's my 2 cents. Check out Sheridan Mentoring. We have a new 3K class starting August 1st. And that's where we do this, implement the plan, but there'd be a lot more detail on adjustments and teaching and everything. So folks, have a nice day. If you have any questions, email me, Dan at Sheridan Mentoring. I hope this is a help to you. Thank you.